is certain that one of the most highly followed stock indexes in the world is the Standard & Poor's 500 Index, containing hundreds of America's top companies. Indeed, this index has a strong track record of returns and provides an average of around 10% every year over long periods. This is why investors always keep an eye on the index and the top stocks, as they may be considered market leaders, with strong earnings reported by bellwether stocks. So, have you ever wished you could look over the shoulder of legendary investors and see what they are buying during the 2022 market crash? It's a good idea because it will give you an insight into their thoughts about the future. It would be interesting to look at their strategy based on their method and time frame. Numerous investors execute this with their 13F filing that occur every quarter. So, there are aggregates as regards the information on top buys and sells. However, a list of the top performing stocks won't indicate which will do well in the future, but many top stocks deliver solid returns yearly. That's why we're here today. Welcome! In this video, we'll be looking to the top 5 stocks the smart money is buying in the 2022 crash, intending to see if there are any leads we can follow for our own investing. This will be interesting because following the best stocks may give you a clue as to which contenders will perform well in the coming years. So watch this video to the end because it's going to be interesting. Also, remember to subscribe to our channel and click the notifications icon so you can stay updated with our videos. So, without wasting any more time, let's get started. 1. Meta. The company is really doing well, as it dropped its first 30% in the second quarter. As we speak, Meta has become a value stock with a price-earnings ratio of only 10.51. It is now down 62.31% year-to-date. The good thing here is that super investors see great value in Meta at these prices. Zuckerberg's pivot of the company into the metaverse has cost billions and has been unsuccessful so far in customer interest or engagement, along with not making any profits. Adding to the pivot of metaverse, Facebook's advertising revenue has also dropped due to macroeconomic conditions. Well, there is also a huge concern as to how Facebook will manage the new regulations against tracking cookies for advertising. So, with the way things are going, buying Meta stocks could really be a great deal for investors, as it will also be for Zuckerberg. 2. Google. Google is still one of the best stocks to buy in this Q2. About 24 super investors bought Alphabet in the second quarter of 2022, while 16 bought Class A shares, Google, and 13 bought Class C shares, Goog. Alphabet currently has some of the best financials and strongest balance sheets in the history of financial markets. Under new Alphabet Chief Executive Sundar Pichai, the transparency of Google has improved. Google started disclosing cloud computing financial metrics with its fourth quarter reports, and now the business is doing really well. It's basically the primary gateway to the World Wide Web and finding anything you want on the internet. In contrast to other companies, Google said it saw an increase in advertising spending in the first half of 2022. 3. Amazon. Amazon remains dominant in e-commerce and cloud computing in the US and many other countries, and some super investors have bought Amazon as its price dropped in Q2. There have been declining sales and revenue, which the company said was due to the 2022 macroeconomic environment and consumers having less discretionary income for online purchases. This is what people see, as it's rather advisable to buy these stocks when it's on the low. Amazon remains the dominant online retailer and has a huge cloud computing business. This could be the opportunity investors have been waiting for. 4. Etsy. Before the COVID-19 pandemic, Etsy was growing nicely by connecting crafty makers with customers looking for something a bit more out of the ordinary than mainstream e-commerce fare. However, Etsy absolutely skyrocketed during the pandemic as it grew more than twice the rate of overall e-commerce. In the second quarter of 2022, Etsy marketplace sales volume was up 141% over comparable pre-pandemic levels. But with the stock falling significantly in the recent stock growth downturn, this could be a great time for long-term investors to take a closer look. 5. Disney. Even though the pandemic hurt its theme park and movie business, it still helped the Disney Plus streaming service grow into a powerhouse years earlier than the company expected. On the streaming side, Disney Plus has had huge success, and the company is now focusing on expanding. Disney might be the ultimate combination of a reopening play and a pandemic-fueled growth business. The service's algorithm-driven forecast system said the stock is an excellent long-term investment. In the site's Disney stock forecast for 2022, the stock is likely to trade at $105.80 in December 2022, as it could reach $126.692 in 3 years. Meanwhile, according to the site's projection, Disney stock could rise to $131.051 in October 2027. With the look of things, it still has tremendous growth potential as the newer areas of the business evolve. And that's it for today, guys. But before we leave, please remember that past performance does not guarantee future results, and it's best never to invest or trade money you cannot afford. Alright, do ensure to give this video a thumbs up, tap on the awesome subscribe button, and jingle the notifications bell so you'll stay updated with our interesting videos. Thanks for watching. See you in the next video.